Picture this, a tech giant's key ally witnessing explosive growth. Not from everyday gadgets, but from the relentless surge in artificial intelligence. That's the thrilling reality unfolding for Hon Hai Precision Industry Co., Nvidia Corp's major server production partner, which just announced an impressive 11% jump in quarterly sales, fueled by robust demand for AI infrastructure. And this is the part most people miss. It's a clear sign that the AI revolution, sparked by innovations like ChatGPT, might be here to stay. According to a company statement, revenue hit NT $2.06 trillion, equivalent to about $67.8 billion for the 3 months ending in September, perfectly aligning with what analysts had predicted. This uptick isn't just numbers on a page. It reflects a global frenzy where billions are being invested in the backbone of AI, from chip manufacturers and networking specialists to firms like Hon Hai that build the servers housing Nvidia's powerful chips. For beginners diving into this world, think of AI infrastructure as the digital highways and warehouses that power everything from smart assistants to advanced data analysis, making our tech lives smoother and more intelligent. But here's where it gets controversial. Is this optimism justified? Or are we witnessing another speculative bubble waiting to burst? It's a debate worth pondering. Hon Hai, better known as Foxconn, has long leaned on Apple Inc. for a significant chunk of its income, assembling devices like iPhones for the American tech titan. Yet, as those sales level off, the company is pivoting heavily toward the AI wave. In fact, executives have forecasted that server-related revenue could more than double in the September quarter, even as their consumer electronics segment remains stagnant. This shift highlights how AI is reshaping business landscapes, offering new opportunities but also requiring adaptation. Adding to the excitement, Hon Hai is set to benefit from its involvement in OpenAI's ambitious Stargate AI infrastructure project. Just last month, OpenAI revealed plans to pour around $400 billion into constructing 5 new data centers across the U.S., teaming up with Oracle Corp and SoftBank Group Corp. For those new to the term, data centers are massive facilities filled with servers that store and process vast amounts of data, acting as the beating heart of AI operations. However, not everything is smooth sailing. Major geopolitical upheavals pose real risks to Hon Hai's operations. Back in May, the company slashed its full-year revenue outlook, blaming potential repercussions from the ongoing U.S.-China trade war. To counter this, it's actively spreading its manufacturing bases beyond China, a strategic move to minimize damage from such tensions. Enter President Donald Trump, who has proposed imposing a 100% tariff on semiconductor imports, a bold policy that could shake up global supply chains. On a positive note, he's pledged exemptions for businesses relocating production to the U.S., which could open doors for companies like Hon Hai. With backing from partners Apple and Nvidia, Hon Hai is ramping up its U.S. presence, adding more AI server manufacturing in states like Wisconsin and Texas, where it already has established facilities. For more on this evolving story, check out the related piece, Foxconn to operate SoftBank's Stargate AI server site in Ohio. Discover additional insights and stories on Bloomberg.com. https://www.bloomberg.com. Copyright 2025, Bloomberg LP. What do you think about this AI-driven growth, or could geopolitical tensions derail it all? Is Trump's tariff plan a game changer or just more uncertainty? We'd love to hear your opinions. Agree, disagree, or share a fresh perspective in the comments below.